Yo, what's good guys? DeepSFX here again, and in this video we're going to be talking about 5 things we should know before trading indices. So like you guys know, this is the episode 7 of our indices trading tutorial. So of course we started from the first to the 7th episode, and I think we have all gotten the full knowledge of indices. I mean, most of us kind of like put a blind eye on these indices episodes because of course some of us are not actually interested in it, and some think I'm just doing it just to make more money on YouTube. Yes, it's not actually so, guys. So I told you guys in the beginning that I was going to be going into the indices world, particularly US30 and Nasdaq. But I don't know if I'm going to dive deep into Nasdaq though, but US30 is going to be like my major course. So without further ado guys, let's dive deep into the 5 things which you actually know before what's trading indices. So the first one, guys, is going to be familiarizing yourself with the trading hours. So of course, I mean, the trading hours is kind of like one of the most important thing, if not the most important thing, because you cannot be trading a pair that is related to United States during Asian session, because of course it's going to be less volatile. I mean, you're not going to be seeing any movement in the market, just like how we have US30, which is the combination of 30 companies in the United States. I mean, if you are trading US30, you cannot tell me that it's doing Asian session, which is like in the midnight. You're not going to be entering your market and be looking for setups on US30. Trust me guys, you're not going to see any trade place. You're not even going to see any momentum in the market. Just like the same way we have nickel, I think nickel 50 or nickel 40 or the likes. That is like the combination of companies in Japanese, which give us that specific index which we call nickel. So if you are trading the nickel 40 or 50, you cannot be trading the nickel 40 or 50 doing during London session or doing Tokyo or New York session, because you're going to get less volatility. But during Asian session, the nickel 40 is going to be more volatile, because it has to do with the combination of companies in the Asia or Tokyo. So the second one, guys, is going to be researching historical performance. So this just have to do with the previous data of the particular index, which means that what the specific index have previously done in the past. There are some major support and resistance level. You guys are very, very much familiar with this. If price have been moving in a kind of way in the past, it kind of like gives you a prediction to what to see in the future. That's why you see that a lot of traders do back testing. They use the play and replay option in our trading view. So that is kind of like something you should actually take as stuff that's going to be important while trading indices, because repeated actions happen in the future. So if you do your back testing very well, and if you look at what price have previously done in the past, definitely it's going to help you in the future. Yeah, so the third one is going to be diversifying your index portfolio, which means that you can actually trade 2 or 3 or even more indexes in the indices market, because sometimes US30 can be very, very crazy volatile, and then you probably don't want to trade US30 due to its high volatility, and you want to look for a lesser volatile index. So you can definitely trade probably something like Nasdaq. But I think Nasdaq and US30 volatility are kind of like similar. So you can go for a less one like German 40 or the nickel 50 or something like that. So you can go for a less volatile index, and diversifying your portfolio definitely reduce your risks in your account. Why when you don't want to go high risks on that particular account. So diversifying your portfolio is going to be the third thing we should know when trading indices. The fourth one is going to be staying informed about relevant news events, which is of course many things that we are familiar with. Crazy news happen in the forex market. There are CPI, there are NFP and the likes. So when trading indices too, just like in the forex market, we definitely want to check if a particular news is going to drop in a particular time. And if you are trading news, you can go for it, and if you are not trading news, you stay off the market and back off, just back off. And the advice I would give for beginner traders is not to trade news on indices, just due to its crazy volatility, because indices is already volatile. Now talk of when you're not going to be trading indices when news is happening. I mean, that is super crazy volatility. So you can trade news if you're experienced, and just back off if you're a new trader. Guys, before I tell you guys the fifth and final thing you should consider when trading indices, let me introduce you guys to Vantage, which is the broker using trading indices, commodities, and even forex. So they offer over 1,000 plus trading instruments with very tight spread, guys, and leverage as high as 1:1000. So Vantage is running a 13% per annual fund growth program, and all you just have to do to enter is what? Nominate your trading account, maintain a daily eligible funds, and trade at least 0.5 lot size per week, and that's just all you have to do. And at the end of the week, you'll be getting a 0.05 weekly interest, which is going to be updated every Monday. So this adds up to 13% annually, guys. So you can check this on the promo section on the Vantage mobile app. So do it to check out Vantage, guys. So the fifth one is going to be using leverage wisely, guys. Even as much as possible, like I said, Vantage provides you a leverage as high as 1:1000. The more your leverage, the more risks you are going to be taking on that specific account. So make sure you use a considerable amount of leverage, and depending on the type of trader you kind of like see yourself, because a professional trader is the one that high leverage is advised to, and if you're a beginner trader, you're advised to use lower leverage. So a leverage that I specifically recommend, or me I use personally, is 1:500, and I think it's kind of cool. So if you are trading indices, you might want to consider lower leverage stuff, because that's the leverage I use trading forex. And the one that I will be considering when trading US30 might probably 1:300 or even 500. So I'm gonna just stick with my 500. Alright, guys, so there you have it, the 5 things that we should know when trading indices, because we are in this together. I mean, you and I are the one going to be trading indices in a couple of days now. So if you guys have any question, make sure you leave it down in the comment section, and if you have any addition, make sure to drop your comments too as well. So don't forget to like, share, and subscribe, guys, and I'll see you guys in the next video. Peace.